Hello, everyone. We break our voice over here. Hey, you know what? Welcome to another episode of My Idaho Friends, where your host, Jaime Lima, me, I don't know what I'm talking in the third person, makes an ass out of himself by just having a really high pitch hello to everybody tuning in. Thank you, Mom, for always watching. Today, we have a more special guest. We always do this. It's always a special guest, right? Today, I don't know how many specials I can say, but today we have Casey Howard, CPA extraordinaire. And I know what you're thinking. Well, I know what you're thinking, definitely. What is a CPA? We're going to talk about that too. But if you don't know, then you're in some serious trouble, and we're here to help you out. And by we, I mean Casey. So before we get to that, we have some Meriwether cider, local cider.
Crack it open.
Best cider. Oh, I'm gonna crack this open. Don't you worry. So we're thinking strong arm semi-sweet, blackberry boom, or grumpy scrumpy.
Let's start with that strong arm semi-sweet.
Somehow I knew you were gonna say that. Boom. All right, let's do this thing. Do you like cider?
I love cider.
You love. Have you had cider from Meriwether Ciders?
I
before?
have.
Oh,
It's
okay.
amazing. In fact, I was never a cider fan until I moved to Idaho and until I tried the Meriwether at the Goat Head Festival.
The Go Ahead Festival.
Yes.
Ah,
And I met the owner's daughters.
there's two of them. Yeah, Molly and
Mhm.
Kate. Molly
Yeah.
and Kate Leadbetter. They're amazing. They're awesome. Their parents and Dave. I mean, no. Oh my God, I can't think. Gig. Why did I say Dave? Gig. Sorry. I'm sorry, Gig. But yeah. Cheers to you and cheers to
Cheers.
some local Meriwether cider.
Thank you.
So good.
So good.
And we're gonna need it because you know I love you long time. In a non-creepy sort of way. I know your
I
husband
know.
Jeff. You're soon to be. You guys are involved. You know what I meant. But yeah, you know, nobody likes to talk about taxes. Nobody likes to like dive deep into taxation. So we're not gonna do that. We're not gonna dive deep at all.
Thank you.
We're gonna drink some cider and we're just gonna sort of like scheme over it a little bit. But you're a CPA. What is a CPA and who do you do your CPA work with and or for?
So a CPA is a certified public accountant.
What?
And currently I'm with the Allen Group based out of Lakewood, Colorado.
Mm-hmm. But you're here in Idaho
I know.
because you're now an Idahoan.
I know.
Taking care of people here.
I know. So I do work from Idaho,
Yeah.
from the luxury of my home.
Outstanding.
So yeah, I've been with this company for a few years,
Mhm.
and it's just a small, about a 10-person firm. And yeah, I mean, the types of clients that we have range from, you know, small to medium-sized businesses, all across, you know, multiple industries, that are from the small sole prop up to the high net worth millionaires. So we cover a wide range of clients.
And everything in between.
And everything in between.
All right, I like it. Inclusivity, diversity. All right, this is gonna be fun. This is gonna be cool. Or at least that's what I'm telling myself because again, people are watching. They're like taxes. So,
I know,
you
they're like, channel.
Yeah, hopefully they don't do that. Well, last week it was Dan Nelson with the Aaron Butler Memorial, Purple Heart Memorial Run, and you know we were diving deep into some like veteran stuff between him and I, and then prior to that, you know, it was super awesome and impactful, yet also very intense conversation with Ty Simpson, who's a storyteller. So everything has been very much related to the current social climate, but. Here's the thing, fam. If you're watching Idaho, outside of my mother, because heaven knows my wife doesn't have time to watch this. She's now helping with the kids. I'm not. She's out there. She's at home with the kids, and I'm not. So I don't have her support.
Someone's got to watch them, Jaime.
Somebody's got to do it. But you know, it's incredibly relevant.
Mhm.
Okay. For those of you that have not noticed, because apparently everybody's forgetting around the nation that you know there's a pandemic going on.
Oh yeah. Is that what's going on? Is that why?
Yeah, there's a little bit of virus, you know,
Oh,
COVID-19
okay.
and whatnot, and
Gotcha.
the country is reopening, and this is not by any means like a political statement of any sort, but things are backfiring a little bit. Okay, regardless whether you believe that it's a hoax, I'm not here to judge you, even though I am judging a little bit because science. But
Cough.
But with that said, no, like the business are being affected, at least here in Ada County, where we're at, here in the valley, here in beautiful Boise, Idaho, our city, my city. Bars and breweries got put back into phase 3. We had already got into phase 4. Everybody was just giving a high five. People are making out in the freaking streets with strangers. People are not wearing t-shirts, touching nipple to nipple. Very awkward, but this is Idaho.
Yeah.
I am making that up. But
I'm not.
But
I'm not.
but no. The whole thing is, it's like we were reopening, and then perhaps some of us, myself included, and I say myself included because I don't want people to feel bad, because they're watching, and they know that I'm talking about them. It's your fault, not mine. But but some people were just not perhaps following some of the guidelines, and then because of the spike and the rise on cases. Local government officials were like, hey, so now that you're caught up, in case you're living under a rock, that's what's happening. So that affected business owners all the way starting in February, especially in March here in Idaho, and a number of things were put in place in order to help business owners. Want to talk about those things that were put in place?
Sure.
Okay.
Probably the biggest thing, of course, is the whole PPP loan, which, as I'm sure many business owners hopefully know, was a stimulus package that was, set up by the government to provide funding to companies to help kind of in this interim period where things aren't jiving, the economy's not in a good place, and, they've set these small businesses up to, if they meet criteria points, then they can have that loan forgiven. So I think there's a lot of motivation there for companies who have received these funds. Okay, let's make sure that we abide by what the IRS wants. We're going to document everything. They're wanting to play by the rules because that's a lot of money at stake right there.
Right.
So to me, that's probably the biggest difference right now. And then, of course, you have the EIDL. The economic disaster loan, and of course you had the deadline extended until July 15th, and apparently that's still up in the air if they're going to extend that even further. So
deadline July 15th, deadline for what?
Oh, well, that's federal. You're right. So except for Idaho.
All right. Once, finally, for once.
Okay.
Thank you, Casey. You're so coming back. You are now my favorite guest.
I stand corrected.
Hey!
Idaho returns were due June 15th, because they have to meet their annual budget by June 30th. So they have a cutoff by June 30th. Most states, with the exception of sprinkle a few in there like Idaho, that haven't adopted the July 15th deadline, the federal due date is July 15th. Q1 and Q2 estimates for 2020 is due July 15th. So they pushed back not only the filing and the extension, but they also pushed back estimated tax payments. So, are you getting excited?
I know a few things here and there.
Oh, I know.
I'm just saying.
I mean, you're so smart.
Oh. Thank you. Say it louder next time. So, let's get down to the nitty gritty. You were talking about some criteria with the PPP. Now, correct me if I'm wrong, because I'm wrong often, except for the one time that that just happened not that long ago. The criteria changed, and changed a couple of times.
Yeah, I'm pretty sure it's still changing.
You can say that. I cannot say that, for I am not a CPA. Casey Howard is. So if I'm a small business owner here in the Valley, and I'm trying to do the very best I can, and perhaps I do not have the most proactive of CPAs, what is it that I should be paying attention to? How is that money supposed to be really spent in order to ensure that said loan is forgiven?
So, probably, of course, the biggest criteria is 60% of the loan needs to be used for payroll-related costs, any rent payments, interest on mortgage payments, and then utilities.
Okay.
But there are, caveats, of course, to the whole payroll, because not everything under payroll is going to qualify. One example off the top of my head is for like an S Corp owner. I don't believe their health insurance for an S Corp owner is factored into the payroll. So you can't, for instance, you can't factor that into payroll. A lot of people also thought that if you took the loan and you made payments to vendors that would qualify, and that does not qualify either. So there's nuances to it, but generally speaking, big picture.
Okay.
Payroll compensation, it's capped off for people who have annual salaries of over $100,000. It's capped off there. Okay. So, but vacation time, PTO, sick time, all of that is included. So originally when the rules were released, they had a time frame of that 75% of the loan needed to be used to cover these costs over an 8-week time period.
Right.
Now they've released, this was probably a couple weeks ago, maybe 3 weeks ago, they released new rules saying, no, now it's not 75%, it's 60%, and now you have the option to extend from an 8-week time frame to a 24-week time frame. And then another big release. Are you itching to
continue? I'm just gonna drink my cider. Yeah.
Well, now I'm getting thirsty.
Oh no, I'm listening. Okay, so what about those business owners that perhaps when the first criteria, when the first rule, it's just like, okay, you have this timeline, and you just freaking used all of their money. So is it like SOL, or as my grandfather would say, shit out of luck?
Yeah, I mean, definitely ran into that with a couple of clients where they were more aggressive on the front end because they thought they were within that 8-week time frame.
Right.
And then I think, and at least in some of the situations that I saw, they were 4 weeks into that 8-week time frame before the government came out and released these new rules. So they've been really aggressive with their funds for 4 weeks.
Yeah.
And now it's like, okay, well now I need to hold my cash because I do have other things that I could use it for. And now I don't have an 8-week time frame. Now I can elect to have a 24-week time frame.
Yeah.
So it's definitely thrown some issues in that region. But generally speaking, it is in favor of the small businesses. I mean, they are setting it up so that you should be able to get it forgiven, right? So, I guess that's our idea. It's just obviously we wish that we would have known about those rules a little sooner.
Right. Yeah, not just you, but all your clients.
Everyone.
Everybody.
Yes.
Business owners, and, to include people that work for said business owners, because they would have told them.
Right?
Yeah, okay. So that covers a little bit of the PPP. Then there's the EIDL. I'm terrible with acronyms. You have to forgive me. Don't want to put you too much on the spot because I know there's just a great deal of information, and you don't have any software or laptop or even your phone in front of you. I have mine on the side. I got notes. In different, no, anyway. This area codes doesn't go along with the conversation. Anyway,
Sorry.
Ludicrous, aging myself, but with the EIDL, so if you were eligible for the PPP, were you also eligible for the EIDL?
Mm-hmm.
Okay, so you were.
You could get both, yes.
And did that create any discrepancies, for, at least like tax consequences or liabilities in any way, shape, or form?
No, it's just that with the EIDL, there's no provision there for it to be forgiven.
Okay.
So that's probably the biggest difference.
Right, so it is a loan.
Yes.
You could say. Now, the loan probably is still fairly favorable to the business owner. It's not,
Oh yeah, don't quote me on this, but I believe the interest rate's 1%.
We're not quoting.
Okay, we're not quoting, but it's a very low interest rate.
A very, very, very low interest rate. I like it. You know, shit is low because the rent is still damn high. That doesn't apply to Idaho. Yes, it does.
And of course, the loan term for loans made previous to June 5th, you have a loan term of 2 years. For loans or for funds that were dispersed after June 5th, they've also allowed for that 2-year term to be extended to 5 years. So it's very favorable for the business.
So, were there any advantages if your business was structured as a LLC, limited liability company? Hopefully nobody heard of the ambulance or the cops.
I know. Are they looking for
like,
you? He's right here.
This is not the time nor the place. Erica, what's happening in this neighborhood? The studio is fine. No, seriously, we're in Boise. It's one of like the safest cities in the world.
We're
So
good.
it's like no big deal, and and everybody has a gun, myself included. Just not right now because I'm drinking. It is safely locked. Have to say all these things
Thank you
because
for
we're
covering
live.
that. Of course. I keep forgetting that.
Yeah, with that. No, don't forget because we're also not driving home because we're drinking.
Well, no, I'm Ubering. Yeah.
So, with that said, were there any advantages, or disadvantages if you were set up as a limited liability company, aka, LLC, or an S corp or a C corp, and you were, and you were trying to take advantage, of I guess I don't want to call it benefits, but these programs, with the PPP and whatnot.
Not really so much of a benefit between the type of entity you are. I think what will benefit you is because, of course, the loan that you receive through the PPP, it's based on your average monthly payroll. So, if it's just you and a guy, of course, the payroll is going to be lower and you're going to receive less funds. So there's really no advantage to being an S corp versus a partnership. It really comes down to the number of employees you have, what your average monthly payroll is, and that's how that's calculated.
Okay. And did it matter if the work family, the employees were full-time or part-time?
It does, because another part of the PPP is that you've got to fill that full-time equivalent by, again, it just changed to December 31st, 2020 now, so that's, again, better. But you have to like reset and go back to the number of FTEs that you had in the period before you received your loan.
The FT who?
So your full-time equivalent employees.
The full-time equivalent.
Yes.
Because earlier you said something about like the S-corp owner or something, and I don't know what an S-corp owner is.
Oh, just the owner of an S corporation.
Oh, owner, S-corp owner.
Did you just say boner?
I sure did.
I said owner.
Okay. I was so confused. And
wow.
So if you backtrack.
That really probably threw a little loop.
Yeah, I kept it together though. Did you notice? Because I am a fucking professional.
I was saying that the health insurance of an S corporation owner.
Owner.
I do not believe is factored into payroll costs for the PPP loan.
So it's certainly not an S corp owner.
No.
I am
No
sorry.
boners
I am sorry,
happening
fam.
here.
No. I'm ashamed of myself. Someday my children will watch this.
You're really
But that's
paying
okay.
half well.
The best thing though is, I was born in 1980, so there was no social media as I was a teenager and a young adult, so,
Oh, you're good.
I'm good.
There's no evidence.
There's just no evidence. There's just this. Cheers.
Cheers. That's the best.
So, S-corp owners, no S-corp owners. And here we are, full-time employees, no part-time employees. Let's transition a little bit more towards like the individuals. So, in the occasion where like individuals are collecting unemployment, but perhaps, they don't have to show up to work, but they were still being offered or receiving money from their employer, which is called a double dip. Not to be confused with the George Costanza double dip. Aging Ourselves, Seinfeld, great episode.
I don't watch Seinfeld.
Oh, fuck it. You know what? Fine. But so
I disappoint everyone every time I bring to light that I'm not a Seinfeld fan.
And that's okay, you know. He only had like a 17-year-old girlfriend when he was 39. Like, nobody talks about that, but you know.
I had no idea. Good for him.
Yeah, it's a weird thing. I don't know why I'm bringing this shit up on this show. I don't want to be this like. Everybody's like, what? I should fucking look it up, man. I mean, yeah, they started dating when she was 18. But if I was 40 and I left Madeline, you know, with my children, be with an 18-year-old lady.
Madeline's a badass, so.
Madeline's a badass.
So.
I just don't know that I will be forgiven so easily.
No.
But Jerry Seinfeld at the time was at the height of his, you know,
yeah, and his
popularity.
ex probably wanted a piece of that.
Something. Oh, the money. Yes, the money. Not the
boner.
not the escort boner.
Yeah,
definitely.
right.
Yeah, just the money. I'm gonna transition back to taxes.
Okay, that's nice.
Because I want this show to be liked. Anyway, but yeah, so let's pretend that somebody's double dipping an accident because they're like just that clueless as to how this current situation works. And it's like, oh, like I'm getting paid by my employer, but I'm on standby and I'm still at home doing all the right things. I'm keeping safe, but I'm also collecting unemployment. What happens to somebody that does that on accident?
Well, so maybe I'm forgetting. I've never experienced something like that because I feel like that would be hard for an employee to do because the employer gets notified by the unemployment.
Ooh, I didn't know that.
Yeah, I only know that because I've had a boss who has reported that previous employees of mine
but they have to, right?
Yeah, I mean, if you get let go, of course you're gonna go file for unemployment. But generally speaking, I believe they reach out to the employer to let them know, hey, you had a claim from a previous employee, and they go through their information and.
Assuming that the employer is paying attention.
Right.
I have some friends who are not paying attention.
Well, I guess that's actually fair.
Yeah, I mean, there's a lot of things going on.
Okay, so I guess that's fair.
You know, and that's why I brought it up. Okay, I brought it up because I know some people are doing that shit. Fucking stop doing it. That's why I brought Casey on the show.
Don't do that.
Don't do that.
That's bad.
Because it's gonna be bad because.
Well, it's not gonna. I mean, you're gonna just get taxed on it.
Boom! You're gonna get taxed on it, and nobody likes to pay the
Taxes.
piper or the Uncle Sam or however you wanna.
No.
Nobody does.
Mm-mm.
I mean, I'm not gonna lie. You know, I work for the government, and I still don't want to pay for the taxes.
No. I mean, I'm a CPA, but my job is to pay as little as possible.
In the most legal of ways.
Of course, in the most legal.
The legal, yeah.
Yes.
But it's like, well, you know, you have, you know, it's beautiful because, yeah, okay, so here we are, all right? God in heaven. I shouldn't say that.
Let's go.
You have, you know, your pre-tax bucket, you have your after-tax bucket, and then you have your no-tax bucket, okay? And whether you're a business owner or an individual, this is what you want. People talk about diversification and they're always thinking about the market, right? They're thinking about mutual funds, they're thinking about stocks, they're thinking about like, oh my gosh, like I got, you know, I guess if you're 65, you're like, I got my money in some CDs, son, and like, you know, you're getting like 1 point dick interest and then you're getting 1099 on that, meaning taxed. So therefore you're really not making any money. And I don't know what CDs are carrying right now, I'm not gonna look that up. But really compared to how you get taxed on it, on that money, whether it's been sitting there for 5 years or however the length of the CD is, it's just not necessarily effective and efficient for your money to work hard for you.
Right.
And I think this is something that perhaps we touch at a different time,
Okay.
you know, in a different way. But I just think it's really cool that, it's really cool once I found out, but it's to me it's incredibly frustrating that this is not something, you know, that I didn't learn when I was a junior in high school.
Oh, I know.
Right. So you know, and you know, you talk about diversification, but you still need to think about, you know, what's your guaranteed money. And you know, like right now with everything that's happening, you know, if you're a business owner, you're an individual, you're trying to hang out to liquidity as much as possible. There is just some like ridiculous percentage. I was reading oh gosh, what was it? I think it was on Bloomberg about 2 days ago, in which like the percentage of people just hoarding money, hoarding cash, is incredibly high, and it makes sense. When something like this happens, it's like you don't know what is, how much liquidity you're
Right.
gonna need in order to meet your bills, go buy groceries, and then on top of that, there's an emergency. But unfortunately for us Americans, and because we're awesome, but also we fail to forget that, that we're selfish and that we're so self-centered,
Mhm.
and and all the brightest and the shiniest of things, we need to have them, and therefore we cannot afford more than like a $400 emergency.
Oh yes, I
Which
read a
is-
really scary article about that.
Right, and that has been like that for like a hot minute. It's not like you cannot be sitting now, all four of you that are watching, I'll be like, freaking millennials, like no, like, well, first of all, you freaking raised them. And millennials right now is like us. I'm effing 40.
I know, and
and I'm a millennial, so it's like, well, I'm trying to do everything the best I can. Anyways, I digress. Different rabbit hole. But I think it's something interesting. And if you're not familiar with the three buckets, you should be talking to your CPA, whether you're an individual or a business owner, and everything in between. You're a trust fund baby. You're still gonna need that tax diversification.
Oh,
If you're a
yeah.
trust fund baby, give me a call. I do have a 9 to 5 job. I might be able to help you. But
likewise, they do a lot of chess.
yeah. I am happily married though.
Which one do you want?
Which one
Ooh,
do I
I'll
want?
take the scrumpy
dude,
crumb.
yeah, scrumpy crummy. Thank you. That's Erica. For all of you. So all the magic in behind the scenes happens because of Erica. Thank
You
you.
even need to get a new cup.
No, I can't hear you.
Mix the pen, right?
Well, that's great. I love
And I'll
that.
difference the other ones out to the next one.
I'll mix this shit. But yeah.
Me
I
too.
shouldn't say that out loud. But thank you, Erica. You're wonderful as usual. Thank you very much. And check out, for those of you that cannot see Erica,
Thank
she's
you.
wearing a mask because she's a freaking responsible human being. She's a
Yeah, what does that say
boss.
about you and I?
Well, that we're not. That's exactly what it says. And it says that we got 2 flying fudge to give. So cheers to us.
Cheers. I'm excited to try this one.
Yeah.
Ooh. That tastes like apple juice.
Yeah, that's cider for you. Hints of apple. And apple seeds. With some organic dirt from
I like this.
the apple field. Yeah, as you can tell, we're very educated in
the cider industry.
tasting.
Yeah.
In the cider industry. We leave it to the professionals. If you are here in Idaho and you have not tried Meriwether cider, you are wrong.
Yes.
So get right.
Again, I did not like ciders until I tried Meriwether.
Pretty awesome.
I know.
Pretty good. It's a great company. With that said, let's get refocused. Because it's difficult for me to focus, and to refocus is even more difficult. But we were talking about
Oh yeah, the unemployment dipping, double dipping.
yeah, the double dipping and all the things and the reasons why
Mhm.
you do not want to do that. So let's transition into a couple of other things. So that's enough pandemic business because we're living through it, and most people know. But if you didn't know, hopefully this was helpful to you. We're trying to make light of it. I know it's a very serious topic in subject matter. Casey is very much a professional. I am not. I just bring drinks to the studio.
Yeah,
That's what I do. But let's get down to some of the nitty-gritties. Some of the things that I have seen in my time here, chatting with different business
Mhm.
owners, sole proprietorships, right? So I've highlighted a number of times in different episodes. It's like, it's, and of course I'm biased, doing businesses in Idaho. Like, I'm not saying all the time. I'm not saying it's the right thing to do, but some things are still done on a handshake.
Oh yeah.
And I'm not saying that doesn't happen in other places, but I have actually seen it and experienced it.
Same.
It's pretty cool. It's pretty nifty.
Mhm.
Nifty is a thing, right? So, but there are some discrepancies, and there are some things that come back to haunt you, because just like the song says, "More money, more problems," the rap hip hop version. Rest in peace, Biggie. But what are some advantages, which I think there are none, but again, I'm not a CPA, but more than likely disadvantages of having a sole proprietorship compared to some of the other ways in which you can structure your business?
Mm-hmm. So I think a lot of people, they'll initially set themselves up as a sole prop because in the end it generally is, they think it's going to be cheaper because it doesn't require its own separate tax return. It's filed on your personal tax return on Schedule C. You don't have to file an operating agreement. There's not the additional filings there that are required as if you're a separate entity like an S corporation or a partnership. The downside to that is that a lot of people will get themselves set up as a sole prop, and generally speaking, the first couple of years of business are always kind of like your startup phase and you're not making that much money. But let's say by year 3 or year 4, you just kill it and...
Gangbusters!
Yes, exactly. Boom!
I learned that, by the way, just 2 days ago.
What is Gangbusters from?
No. I learned that from Paul Anderson and Anderson Reserve, who is going to be a guest later on next month. Yeah, we're just talking. What if the business is going gangbusters? And I was just, that's really exciting. It rhymes with Ghostbusters. Anyways, I'm gonna shut the fuck up.
Gangbuster. Okay, I like it.
Yeah. So
where a lot of sole props will find themselves in trouble is in that year that they're gangbusters. They kill it.
You're killing it.
And they get slammed with the SC tax. So of course you get
more money, more problems.
I know, but you get a credit for half of the SC tax. You get a credit for that to offset it. But at the end of the day, it's still, in my opinion, I'm a huge fan of S corporations. So I have always like a dollar figure in my head of, generally I'll get a dollar figure in my head when I'm dealing with a sole prop, and I'll throw that out. Hey, if your net income is going to be over this amount, then we need to do an S corp election. It's not beneficial. You're not saving money, even with paying for the additional tax return filing for the business or whatever state you're operating in. Some require, annual reports to be filed, or they're subject to franchise tax, or every state's different. Even then though, the tax savings aren't going to outweigh the fees associated with the additional returns or the state filings or whatever. So I'm a huge fan of S corps. Why is because, of course, it passes through to the individual. Don't want to get it mixed up with a C corporation. A C corporation, of course, is taxed at the entity level. There's nothing that'll pass through down to the owner, of course, unless they take dividends. But an S corporation, you don't pay tax. It flows through to the owners. An S corporation owner.
Keywords. Words do have meanings. Yeah. Thank you, Erica.
And
I'm just gonna
so yeah, I've dealt with it several times with sole props. Probably the most I do right now even is I'll take a lot of sole props and I'll do an S corp election.
Right. And
thank you.
From my understanding, and I know this is a little bit out of your expertise, so I do not mean this probably falls more under the business attorney, estate planning side of the house. But there's just a great deal of liabilities, depending on the business that you have. Some liabilities are going to be higher than others. But within a sole proprietorship, if something happens, and let's just layman's terms, you end up getting sued.
Your personal assets are at risk.
Your personal assets are at risk. So, if you had like an S corp, C corp, LLC, there's the business. Like if I had I don't know, that I have the big booty lover consulting.
I know.
I'm not saying I don't know why that came out so naturally. It just did.
I think you're onto something.
But let's say that's my business.
Okay.
But as a sole proprietorship, big booty lover consulting, and and then my personal assets, my house, my savings, my investments, and everything else. Something happens within my consulting firm, and then I get sued or for whatever, A, B, all the way to X, YZXZ, last word in the last letter in the alphabet. Oh my God, Cider's hitting.
Someone get him some food.
Someone get him some food. Enjoy some water. Goddamn. But they come after the business. They're not just coming after the business. They're coming out of my personal assets.
Mm-hmm.
And for example, for me, if I have a spouse and I have my children, then I have exposed all of them.
Right.
As if I have a LLC, the limited liability company, an S corp, your favorite, and a C corp, then it's separate.
Yeah.
Not your favorite. Yeah,
No,
I know
not
that
my
I said the S corp. Okay, you said it. You said it. But that's also an option.
Mm-hmm.
Excuse me, for different reasons.
Well, that's why you always see, like, of course, in the real estate industry, you never hold the real estate yourself. You always put it in a partnership.
Right.
Because let's say that someone sued you for, I don't care if it was a commercial or a residential rental. Let's say that that ceiling or roof collapsed in that home. Of
Yeah.
course, those people that are leasing the home, they're going to come after you.
Right.
So, again, you're right. It is all liability. A lot of it is liability protection for sure.
Okay.
You're right again.
I just know a few things.
Getting
here,
a big
but-
head.
Oh, that's what she said. Wow! Oh my God! End the episode. That's it. Oh, if my father was alive, he'd be so proud.
I want to ask a question. What's your favorite cider?
So Erica just asked, what is her favorite cider?
Mm.
I only repeat her question because she is, again, being super crazy responsible and she's wearing a mask. I know what the beautiful blackberry boom tastes like
Yeah. Okay,
because
so
I have a case of it at home, among other things.
I really might like this one.
Really?
And the strong arm,
Until the Grumpy Scrumpy is your jam.
dude,
This
yeah,
is
it's
the
really
Grumpy
good.
Scrumpy. Erica just left it because she put the bottles in the recycling. So she's like,
Oh,
it was a Grumpy Scrumpy.
I think it's
I
Yeah.
have not tried that one yet, so
It's
I'm excited.
No,
really
yeah,
good.
Would you?
Oh, that's okay.
Okay, COVID.
yeah, we don't share right now. God, you're showing bad etiquette on.
Stupid virus. I'm so sorry. Sorry.
Go get us a vaccine.
I'll get right on it.
God.
I'll call Dad. Okay, so thank you for covering that. Why? This is a very specific example that might
Okay.
resonate with some things, and it's like, by the way, you guys at home, you don't worry about how I know these things. So you're a business owner, and say you're a business owner, and you have, business owner A, you have one business, and then that business leads to another opportunity to have a similar business, but not the same,
Mm-hmm.
under the same roof, if you may.
Mhm.
And then there's the potential for a third business later on. Why would you want to structure those? Outside of the obvious reasons, out of a sole proprietorship, but perhaps like to me, okay, because I know your S corp is your jam. You're the CPA, and you're the subject matter expert on that. It
Mhm.
comes to taxes and things like that, keeping more money in your pocket. I am big on liabilities. I am big on growing assets, but I'm also big on tax diversification strategies. So
Mhm.
for me, it will just make sense, for example, to have one entity that houses different LLCs underneath it.
Mhm.
Okay? Which is, and thank you for going like that. I'm not saying you're agreeing or not agreeing, and without getting into too much detail, why would that be a good idea?
Well, for purposes of if it's a different business activity, you're not
Mhm.
going to want to necessarily keep that, all under one roof because it's not. I'm trying to decide how to say this, but like for instance, if the activity code for something is going to be different than what the activity code is at the parent level, then you'll want to segregate that out. And I mean,
Right.
you can set it up as I guess you could set it up as an LLC underneath that. Most of the times, it's probably easiest to set it up as just a disregarded entity. if that's an option for that company, so that, and what that basically means is you don't have to file a tax return. You do have to maintain a separate set of books for it, but then you pretty much just consolidate it with the books at the parent level and report it on the parent tax return. So most of the times when I see companies structured like that, or where it's tiered, a lot of times they'll have the disregarded entities below like the parent company. But you can have multiple entities that can flow into that. It just kind of depends.
Yeah.
Kind of depends on the business.
Right, and we're not gonna go down that rabbit hole. I've also seen it with divorces.
Oh, what do you mean?
Well, let's say you have a problematic ex-spouse because he or she are fucking crazy.
That's normal.
Notice that I say he or she.
Yeah, thank you.
Or anything in between. And for all of our brothers and sisters. Inclusivity!
I appreciate that. It's not always the woman.
Because we're really big.
I
know. Yeah. I get it. Thank you for the thumbs up, Eric.
Yeah, I know, right?
I do my best. I'm learning and I'm trying and I'm growing, okay? Everybody come along for the ride. Shit. No, but different ways into you're able to not only protect yourself, but also if like there's children and there's going to be some sort of like estate planning coming along in which like you're going to be passing down some sort of wealth and or debt, and and that gets mitigated by life insurance, and that's not what we're talking about today. But there's just a number of steps that you're able to take in order to protect yourself, protect your family, and also protect your work family and those people that work for you. Now, you were touching a little bit on operational agreements. Why are those important?
You just never know how that business is going to wind down. And that is literally what it all comes. Of course, it's different for S-Corps and partnerships. Partnerships, it's all about how the income or the loss is allocated to each partner. So they have, partnership agreements are super complex because they can have all these special allocations and,
So, I forget. This is my fault, fam. I'm failing you right now. Please forgive me. This is on me. I got ahead of myself.
Okay.
Well, I'm very careful because I think this is most certainly not an educational.
No.
But it is. So what is an operational agreement? Let's just start with that. I'm sorry.
Oh, okay.
No, and that's not your fault. I didn't ask that. I just went on and we were, why would you not want one?
Okay.
So yeah.
Yes.
And you answered it right, and you're absolutely correct, and we'll touch on that. We will circle back to it. That's my job.
No, I like it. So an operating agreement is generally what is filed. It's done by an attorney, typically.
Right. Which you and I are not.
Well, I'm not. I do not do operational agreements. I just read them. I read them and interpret them. And by interpret them, I usually go to my boss and I'm like, hey, am I thinking this correctly through?
And I might have read them before too, and I might go to my boss and be like, hey, motherfucker, I don't say that to my boss. I'm so sorry.
But operating agreements are super important, not to be confused with articles of incorporation. So articles of incorporation are for an S corporation, and an operating agreement is for a partnership.
I love you. Thank you for clarifying that. Oh gosh, I knew you were the right person for this. Continue, please.
And yes, operating agreements are crucial because two important things to take away from it always is how the income or the loss, depending on if you have an income or you have a loss, it can be allocated differently to partners. So that's step one that you always have to read through in an operating agreement. And step two is when eventually the partnership does wind down, are there any specifications for truing up capital accounts that are in negative, they're deficit, or ones that are positive? So there's always nuances for winding down a partnership that you have to, because you're trying to zero out, that capital account for each partner, and that you have to rely on the operating agreement for that.
Yeah.
So, yes.
And I'm not going to put words in your mouth, but perhaps if you're a startup and you're trying to run as lean as possible, great book, The Lean Startup. if you have a business or you're planning on starting one, you should read it.
Oh, I've not heard of that.
Oh, well, I got you, boo.
Oh,
I'm
thank
freaking getting
you.
a copy.
Oh,
That you know,
good.
Erica. Once we have a budget, which is not now, we'll give out a book to our guests. Let's mark for Casey Howard, the Lean Startup.
I like it.
And then you can give it to all your clients and
Oh,
be like,
that's
"Here,
great.
dumbass."
I love it.
Yeah, no. But with that said, the wrong idea, which I have seen happen.
Mm-hmm.
Notice how I'm always so careful.
I know, I like it.
Just ever so careful.
You're so sensitive
I
towards
am.
others'
I'm
feelings.
just a sensitive fellow. I am sorry. But you know, you can Google an operational agreement
Yeah, you can't actually.
and you can copy and paste it and just edit like, oh, this was for like a freaking I don't know,
Yeah.
freaking candlestick making company, but I am trying to run like a gym or a brewery. That was default to breweries and ciders, Meriwether. Hi.
Hi.
But one day we'll have sponsors. But
It's a long-term goal.
it is a long-term goal. Someday I'll monetize this. Not for free, goddammit. But I'm kidding. It doesn't have to happen, but if it does, it'd be nice. The issue that I see often, or that I hear about, if you will excuse me, is that you just put together this like Frankenstein operational agreement and then you just jump into it. Now, if it's just you, it's not a big deal, but at least for a little bit.
Right.
Eventually you're just gonna have to like reach out to a professional. You're gonna have to reach out to a business attorney. You're gonna reach out to a competent CPA.
Oh, yes.
And get things squared away. What you were mentioning before, and just like I'm the layman's terms king on this show. I just bring
You're so
everything down
modest.
to the lowest common denominator because that's what I am. Fucking A. But once you enter a partnership and you have, one person, and what people forget when they start their business, especially if they have 3 and 4, it's like it's the equivalent of a marriage.
Yeah.
Okay, and if you haven't been married, and if you haven't been married a couple of times,
Oh, I can't wink at that one, but.
well, I didn't wink. I just took a breath.
Okay, I
But,
can take a breath on that one.
But therein lies the issue in which like now you're in a financial relationship with multiple partners, and having a sharp operational agreement, just like you mentioned, is gonna facilitate a lot of peace of mind.
Yes.
And even more so if there's a buy-sell agreement involved with that, which we're not going to talk about because we're running out of time.
Thank God.
No, buy-sell agreements are my jam, but that's just not for here.
Oh,
now
that's
and
great.
then. No, I say, why
Good to
would they
know.
be my jam? Don't worry about it.
I don't know.
We'll
I was
find
wondering
out
the same
someday.
thing. Next episode.
Next episode, definitely not. Definitely not. Next episode is going to be fun, but it will not be as fun as this because taxes
Right? I mean, come on, dude.
and cider.
Taxes and faxes. What's better to talk about?
Death.
I love estates.
Estate planning is great. There should be a follow-up episode between you and I'll bring a business and estate planning attorney and we'll figure it out. And then I'll just be here asking the questions. And it's going to be fantastic. It's going to be awesome. Yeah, but with that said, it's just something in which I spin my gears a great deal because if all of a sudden you were to lose one of the partners, or there's a disagreement with one of the partners, or let's say you have 3 partners and everybody says like, oh, we're friends and we're going to start a business and we're all 3 of us are equal partners, but 2 of them put like the majority of like the actual like financial equity, but the third one is putting a lot of time equity into it.
Right.
Well, what does that look like? And 2 of them have children and the other one is just like,
Right.
I
know.
wild and
Willy
sexy
nilling
guy,
around.
1970s SNL. Did you get the reference? Anybody? No? Okay. fine.
No, I don't.
Okay.
Yeah.
Erica did in the back. That's why she loves me! So, I think if it's okay with you, we'll set up something, and if there's just a number of questions and interactions and feedback, because it always happens after we end up closing the show for like about a week or two, I think a great deal of people could benefit from your expertise.
Awesome. I hope so. I mean, I know I can provide it.
I know you can, and that's why I brought you here.
Okay, good.
So Casey, we're gonna be closing up the episode.
Okay.
Before I start thanking people and doing all these other things, is there anything that you would like to share with all of us and like our audience of 1.3 people that are watching right now? I'm kidding. There's more. There's more. There's more.
I was like, oh, really? 1.3? How does that work?
Your husband and your dog.
Oh, so Jeff,
Soon
Jeff
to
is
be
the
husband.
0.3, Layla's the 1. That makes sense.
Alright. I'm sorry, Jeff.
Sorry, Jeff. Love you.
I love him too.
Not really. I guess my advice would just, or what I would want to leave on is just 2020 is a weird year tax-wise for sure. Not just for businesses, but for individuals as well. Just kind of stay reading the news, as knowledgeable as possible on everything. Contact your local CPA. Contact me. Because we didn't even touch on like any of the changes this year, as a result of the pandemic. And then who knows, it is an election year. Who knows what's going to be coming up after November, and the tax reform that could potentially happen there if it switches over. So, and there's already been some talk about, changing some big items that were introduced with the Trump administration, such as the qualified business income deduction. So little things like that, I would just encourage everyone to try to stay in tune as much as possible.
Awesome.
Don't get screwed.
Don't get screwed.
Don't get screwed.
Okay. With that said, okay, as always, first of all, big shout out and big thanks to Justin and Erica here at Argos Productions, who allowed me to use their studio and their place and run my shenanigans with some of my favorite people and share hopefully a little bit of useful and valuable knowledge to you. For those of you watching at home, especially my business owner friends and those who work for them, stay the course. Things are really fucking weird all over the place, and just about the only way that I can explain them. We have been rolled out back to phase 3 here in our great city in the state of Idaho. Just be careful, just be mindful. I know it is difficult, I know it is challenging, and I'm not gonna be here preaching to you whether you're right or wrong, but truly, and keep it, just be aware of it at all times. When in doubt, pretty please, with a fucking sherry on top, be kind. And if that means that you're not comfortable wearing a mask and you have to fucking wear one, fucking do it. And if that means that if you're sick, that you get to stay at home. A lot of people are out there working and they're very concerned about the exposure that they're gonna have to their loved ones. If you want a few more details about how I feel and we feel over here about it in our show, there's 2 episodes with Tom Kaufman here. He will hate for me to say it, but he's the most senior epidemiologist and infectious diseases doctor here in the state of Idaho. And it's difficult, and I get it, it's a pain in the ass. I'm not trying to talk you out of anything. If you think that this is all a hoax, and if you think that this is just one way, and then in which like the government is just trying to just squeeze a little bit more freedom out of you, then I feel for you. I really do. And I'm not hating on you, and I'm not trying to like point the finger at you, but I just truly hope that nobody that you care about and nobody that you love gets sick or passes away from this. Because at one point in time, we're gonna transition into the fall, AKA flu season. And now we're gonna have to be dealing with that shit as well. Again, that's not a plug for anything, but just be mindful and seriously, truly, when in doubt, be kind. I wanna thank my awesome, super great, and without a doubt, cute as a button guest, Casey Howard for coming over and answering all the questions and putting up with my weird shit. I really appreciate your time. I really appreciate sharing your knowledge with us. If you're a business owner or an individual and have some questions and you can all of a sudden you just need a little bit of extra help or a second opinion, you can contact Casey at
Casey.Howard@theallengroupcpa.com.
or you can also follow her on social media at
Oh, even better. Casey Howard 87 on Instagram.
fucking A, right. Follow her on the
Or
Insta.
Facebook, Casey Howard.
And Casey Howard and whatnot. If you happen to follow me, you can find her there because we're freaking hanging out. And
Yeah,
whatnot.
duh.
All the time.
Yeah, what?
Not enough.
I know.
Casey, thank you so much for your time.
Thank you for
I most
having me.
certainly appreciate you. And for everybody watching at home, have a great day. And again, we came down. Be fucking kind to each other. For fucking Christ's sake, fucking crying out loud. Be cool to each other. Be good. Be kind. I love you a long time. Cheers. We'll see you guys next week.
Bye.
Nailed it.
Sweet.